So major trading indicators are flashing big red flags for potential crash in gold and silver. Pay very close attention. The speculative bubble, in particular in silver, indicates 264% year-to-date surge when the prices hit $100. This does not indicate the $120 price level, which at this point is unreachable in a very short term. Very important that over here, the supply and demand is no longer on the table, which means that the technical terms, both trades, couldn't be predicted as precisely as on the fundamental level. This is why Wall Street predicts a snapback to at least $50 and strong consolidation at these levels. Kicker over here is that usually Wall Street is wrong, and it's wrong on purpose, because they're not really gonna give you how low it go or how high it will go. Remember, they have to make profit. They have to be always at least 10 steps ahead of you. So what this even means, they most likely are pricing it to go even lower. Who knows, maybe $40. But they want to make sure that they will be able to sell enough before you start selling. Because when they start dumping pieces by pieces, the prices will go lower and lower. So for example, if Wall Street is doing the calculations, let's say we want to sell $100 million at average price of, let's say, 45. They're telling people that it could go down to 50. So when they start selling at 50 or 60 or 55, every small chunk of silver that's dumped on the market will cause lower price. So when they get all the silver sold, they're going to take the average price of all the chunks executed on different prices. I sold 10 million at 65, I sold 50 million at 50, I sold 45 million at 55 as well. So then you take the average and then you get the price. Second important element over here, the big people who push the prices of gold and silver up have taken substantial profits, 25 to 26%. We're seeing that already has been taken off the table, which indicates that the dip 40%, a single dip that we saw in silver, was not something that was manipulated. People just took profits. And why the silver didn't recoup the losses and went back to 40%? Because these people didn't buy in. Again, this is on the fundamental terms. This is why we said technicals, you cannot judge anything, because people who jumped on the rally are not following the actual technical trade. They don't buy on support and resistance or selling on support and resistance. They just follow their own profit-taking strategy. Third important element that over here flashes the red lights is the macro headwinds. They're changing. Like I mentioned in my previous videos, first of all, gold and silver no longer play the role of a hedge. The gold is falling, silver is falling, stock market is falling, crypto is falling. So what it gives to buy gold and silver when everything falls, and when anything goes up, it also goes up. So it doesn't make any sense. Also, it's very illiquid, right? It's not as liquid as the stock market. So the geopolitical calmness, right? There's no longer escalation, war situation, gives a dollar edge over the gold and silver, adding a small bonus with the new Fed chair, Kevin Walsh, who will be stepping this summer, right? And don't be so naive to think that everyone will be waiting, holding their gold and silver until the new Fed chair to see what's going to happen. No, people are smart. People are going to anticipate the move, okay? Anticipate the move, meaning they're going to take action prior to see what actually is happening. Don't be the last person making the decisions about the market. Well, maybe this will happen, and you're going to be left in a very complicated decision-making situation. Very important also over here, Donald Trump is focusing on improving the value of the dollar. This is why he created Bitcoin reserve. This is why he's focusing on crypto. He also have its own crypto form, right? So he has personal direct interest of pushing towards crypto, not gold and silver. And crypto, it's not an enemy of a dollar. Just think about it. Wow, if you think about it, right, gold and silver are not favorable in competition with dollar. This is why it will set the stage for a completely new flip And remember, if the governments, which are the main driver of the rallies of gold and silver, stop buying or start lagging their reserves, you might see some of them releasing, because remember, all of these other countries, they have very, very bad economies. They have bad currencies, which are usually devalued. They have bad inflation, right? So all these other countries, they're holding the gold for security reasons, which means is that the first issue that they have in their country, financial crisis, recession, anything related to security risks, right? They will dump gold and silver, so they will be able to get probably dollars which hold their value and will help them to resolve the issues. This is why something a lot of people do not understand, that a lot of countries who purchase gold and silver are not like you individuals buying it, so I will protect my investment and I'm gonna make money. The countries are not looking into the gold and silver as making money. They're looking at it in a way in which they provide a securitization of their own currency, point number one. Because like I said, if you have like some currency that no one accepts, that depreciates, just look at how many countries around the world have see either hyperinflation, people walking with 2 bags of paper money that worth like $1, right? Or countries have seen like their local currency depreciates, right? The reason for it is that many of these countries may mostly rely on international trading agreements, and most of the international trading agreements are pre-signed for many years ahead in US dollars. Remember, there was a major push for canceling the US dollar in some of these trading agreements between China and US, between China and Saudi Arabia for oil. The idea was to weaken the power, the influence, and the value of the US dollar. It's fair to say that most of this actually failed, and the reason for it is that a lot of these countries will be causing even greater risk and exposure to risk for themselves, right? On paper might look good, we're more independent, we're using our currency, but then don't forget that everything it's a loop where using your own currency on paper looks good, but in real life, if you cannot really exchange or improve the value of your local currency by improving your local economy, you're kind of shooting yourself in the foot. So pay very close attention. These are 3 major headwinds which Wall Street technically sees that will play out very soon in 2026.